This is a presentation on Boral Limited 2010 Annual Report. Boral Limited supplies and manufactures a wide range of buildings and construction materials in Australia, the United States and Asia. The company operates internationally through 4 main operating divisions including Boral Building Products, Boral Cement, Boral Construction Materials and Boral Construction related businesses. As you can see on the rough diagram of the group structure, Boral Limited has many investments in subsidiaries, associates and jointly controlled entities all around the world. The consolidated profit after tax attributable to shareholders of the parent entity for the 2010 financial year is at a loss of $96.1 million. Mark Salway was appointed as Boral's CEO on 1st of January 2010. During the 2010 financial year, Mark received a remuneration package in a total of $2.32 million. Accordingly, Mark's base salary shows an amount of $1 million around. It has also been apparent that Mark's received short-term incentives of $1.1 million, being rewarded for achievement of key financial and non-financial performance objectives. Other benefits Salways have received includes parking and long service leave accruals, which have amounted to $17,000. Salway's long-term incentive entitlements is 100% of fixed remuneration annually granted as options or shares rights. In addition, there was an allocation of share-based payment of $173 million and superannuations of $7.2 million. The company's auditors for the 2010 financial year is KPMG, and the consolidated auditor's fee for the year is $1.856 million. KPMG has also provided other assurance services including tax services. The total fees for all other professional service are at a consolidated level around $1.78 million. During the 2010 financial year, Boral as a parent entity has reported 103 controlled entities, 64 subsidiaries, which are located in Australia, and 39 are foreign subsidiaries located mainly in 9 different countries. They includes the United States of America, United Kingdom, Jersey, Netherlands, Germany, New Zealand, Singapore, Thailand and Indonesia. Due to economic downturns, the 14 subsidiaries are in liquidation during the year. The report has presented 87 out of 89 sustaining subsidiaries are 100% owned by Boral Limited. The other 2 controlled entities are 90% and 89.47% owned by Boral Limited. There is no present evidence that Boral Limited has less than 50% ownership of any of its controlled entities. For the 2010 financial year, there are 14 investment in associates, which total to $294 million in value. Boral Limited have interest in jointly controlled operations and assets. Jointly controlled operations or jointly controlled assets involves the ventures combining their operations, resources, expertise, and jointly owning assets in order to manufacture, extract, create or build. A jointly controlled operation and jointly controlled asset is different from a jointly controlled entity because it does not involve the establishment of a corporation or other entity that is separate from the ventures themselves. It is common in practice to describe jointly controlled operation and jointly controlled assets as unincorporated joint ventures because of the absence of corporate structure. The interest of Boral is in unincorporated joint ventures and jointly controlled assets are brought into account by recognizing its financial statements, the asset it controls, and the liability it incurs, the expenses it incurs, and its shares of income it earns from the sale of goods or services by joint venture. In reference to Boral Limited, the entity parent presents to have interest in 14 jointly controlled operations and assets, as those business activities are conducted under joint ventures arrangement involving purchases and sales of products, dividends and interest. The consolidated goodwill for financial year 2010 is 275 million, and Boral identifies its CGU, which is cash generating units, according to the business type and country of operations for impairment test purposes. There has been impairment of goodwill in the 2010 financial year of 4.3 million. Boral has formed a tax consolidated group effective in 1st of July 2002 and operates as a parent entity for the income tax purposes. Boral has made the segment disclosure in Note 2 according to the management approach in AASB 8, under which operating segments are presented on the same basis as that used for the internal report, and it's reviewed by the CEO. Boral's accounting method used in its consolidation accounts for investment in subsidiaries, associates, jointly controlled entities, and interest in jointly controlled operations and assets are stated in Note 1 as of significant accounting policies. It is noted that certain transactions are eliminated on consolidation. Firstly, the subsidiaries are controlled by Boral either directly or indirectly in governing in the financial and operation policies or through potential exercisable or convertible voting rights. According to AASB 127, consolidated and separate financial statements investment in subsidiaries are included in the consolidated accounts from the date when control commences and until the date that control ceases. Intra-group transactions and balances and any unrealized gains or losses arising from the intra-group transactions are eliminated in the consolidated accounts. Significant influence over financial and operating policies is considered when identifying the associates for the group for accounting and disclosure purposes. According to AASB 128, investment in associates, the share of the total recognized gains and losses of associates are included in the consolidated accounts based on equity accounting method, from the date when a significant influence commences until the date that ceases. It is noted that if the share of losses by the group exceeds the interest in the associates, the group's carrying amount is reduced to nil, and the recognition of further losses is discounted to the extent that legal or constructive obligations or payments are made by group on behalf of an associate. In accordance with AASB 131, interest in joint ventures, the assets controlled by Boral, liabilities and expenses it incurs, its shares of income earned by sale of goods or services by the joint ventures are recognized on the consolidated accounts as interest in unincorporated joint ventures and jointly controlled assets. Any unrealized gains arising from the transactions with associates and jointly controlled entities are eliminated to the extent of the group's interest in the entity. Unrealized losses arising from the transactions with associates are eliminated in the same way as unrealized gains and are to the extent when there is no evidence of impairment. Starting as of 1st of July 2009, the group has adopted the following AASB interpretations. These include AASB 3 business combinations, AASB 8 operating segments, AASB 101 presentation of financial statements, AASB 123 borrowing costs, AASB 127 consolidated and separate financial statements, AASB 128 investments in associates, and AASB 131 interest in joint ventures. According to the annual reports, however, adoptions of these standards has not resulted in any material changes to the group's financial reports. The AASB has issued additional standards and interpretations that are effective for periods commencing after the date of the financial reports which have not yet been adopted by the group. Thank you very much.